What's up, guys? Quick video here. Kind of like this is Friday right here that we have. Pretty small day so far. As you can see, we were still inside the previous daily high and previous daily low, so we're actually trading in the inside bar as an inside bar on the daily time frame. So basically, this is your daily range, your daily candle right here. There's literally nothing going on really, and that's what happened when you have like large expansion on the previous daily range. But still, like, I like what I see right here. So even if it was a little bit sketchy, you can see that it played pretty nice. So again, this is the previous daily range right here, that green box that you see. You can see the annotation of the line right here. So this is previous daily low, previous daily high. And this little box that you see right here, that's the one that formed from the 6 p.m. so daily open to actually 2 a.m. in the morning. So when you have the kill zone open from 2 to 5, right, from 2 to 5, so basically the small area here, uh, this is where the box stop at 2 a.m. So we're kind of like utilizing this portion of price action from 6 to 2 a.m. as our accumulation range for the day. So as you can see, the accumulation was not done yet, right? Because of this large sell side imbalance right here. So if we take this low right here from this candle here to this candle high right here, and we extend this as a box or rectangle. After I did identify the quadrant inside, so basically this is 25% of the sell side imbalance right here. We got 50% of the imbalance right here, and we got 75% of the imbalance right here. So when I trade this model, I'm always relying on what I have. Like, like I'm looking at this box particularly, this one right here, and I'm looking at everything above that box right here as an external range for the current daily range. Okay, and I'm looking at what I can rely on the previous day as some arrays that I can use to basically catch, simply just an hour, or it can be 1/15 minute or whatever. It just can be whatever that you want, right? It can be a little scap of 5 minutes inside of that. It can be a 15 minute. It can be like, it's pretty rare that you can catch, from the literally high of the day to the literally low of the day. So these are possible, right? It's still possible. Like, look right here at 10 a.m. That was so horrible that it basically distributed almost the whole day, taking these low right here as um, relatively low resistance, right? So low resistance overall, but there's some relative equal low right here that I can see that pretty much matching the 50% of the current daily range at prior to 2 a.m. So basically the EQ of this box right here and previous daily EQ right here. So that's where we close the price for the day, like literally in between this EQ right here and this previous daily EQ right here. So that's little pocket right here. That's where we close the price. And as you can see as well, it's not there, but you have the daily open line that you can extend right here. That's been retested many times on both sides of the marketplace on that day specifically. So if we read all these things right here, I'm gonna start from the point of origin, meaning the daily open here, and I'll break you down the whole thing, one by candle by candle, so you can see a little bit what's the narrative and during this day specifically. So first of all, we got this big run on buy side right here. So that was the 2300, like basically. We touched these previous high right here. This high as well has been taken before a small distribution inside this buy side imbalance in the previous daily range. And this was a really big run. That was basically some announcement on Trump stuff. Okay, so that's fine. So what you kind of like want to see is like, this is a large buy side imbalance. So that first of all has been filled, right? You can see right here, market drop really fast. It's a very sudden and quick distribution from a premium level to a relative like EQ level, so meaning a balance area. And you can see right here there's a large BC right here. There's another one right here. So these has been basically rebounds, and I was using this order block right here. So basically this one right here. You can see price on the new day right here as accumulating a little bit of high side just above these high, but didn't reach for that high yet. Okay. But they keep these two higher. Here's low resistance for the later on. That's where the distribution started here. So it started distributing. It didn't take the low immediately. So that was the initial move down. This candle right here, take these lows right here, and it's still inside this buy side imbalance. Interesting reaction on the 50% of the previous day, you can see right here. But it keep digging a little bit lower, dig a little bit lower, tap the order block right here. And these two candles side by side, that's CPT stuff. Basically, if you look at the condition you have, when you have two candle closing side by side, that's one of my theory, basically. Just nothing related to ICT or anything like that. But when you see these two candle closing side by side, you can look at the candlesticks wicks, okay? And these are fractal structure on lower time frame because these are 15-minute. So on the 1 minute, this 15-minute here has, you know, a low inside of it. Has a low like this. Like think about some sort of like a little V shape or whatever. It's a low inside of this low right here because the close is right here, right? This candle right here drop lower, take the previous low in the order block again, right? I'm not sure that we took that lower. I don't think so. I don't think so. I think that was relatively equal. So this will have been, this little wicks right would have been potential rejection block, but that's fine. But if you look at the condition right here, you see that this low is lower than this previous low, right? But it closed back inside the range. So these are side by side candle. And the condition on this right here is high resistance for me. Like see that this low is lower than this low, so automatically the liquidity below this previous 15-minute low has been taken. Range closed back inside the range, so this whole area of 2 wicks, that's a rejection area. So meaning price is basically trading in the same area of price, and it's rejecting both of the wicks. Like I don't know if I can zoom in. I don't think so. Yeah, I can zoom in a little bit here. I'm just not sure if I can. Yeah, it's not really the best thing. I'm using like the browser thing, but you can see a little bit here. There's a small difference in between those two. So when you see two candle closing side by side, you can look at the condition on the bottom side or the upside. You can see right here high resistance on the bottom, low resistance on the high. That's why price is running higher. Okay, so same thing right here, right? You can see right here. You can see right here these two candles side by side. This wicks is higher than this one, so the retracement makes sense. You can see these two right here. You know, look at the two wicks on the bottom. So this is 50% of this wicks right here, midpoint of that. There's a small bullish fair value gap that where everything started. There's this bullish order block right here. So you know what I mean, right? You put this back to 100%. There we go. So this is where the whole move initiated here. So I actually took this move up right here. Okay, I actually took this move up right here. I don't have the chart right now, but it's basically what I've done yesterday. And I was trading in Asia from 8:30 to like 10:30, if I'm not mistaken. Yeah, 10:30. So there was this high, and you know, basically close everything right here because we reached for 25% of the sell side imbalance. That was basically a very nice low objective and king fruits. So look, you have this high right here and this high right here, and you have the 20. Like when you have these large imbalance like this, it's worth putting a 25, 50, 75% quadrant on it. Because if you don't do that, like where the price gonna go inside, where like you can obviously use the midpoint, but I like to use all of them. So 25, 50, and 75. I was happy with the 25. That was pretty good run right here. Okay, that was pretty good run. And then it just start distributing it again right here. Retap this order block right here, right? This bearish candle right here, down close candle. If you take the opening price of that, you extend in time. That's your order block. That's also midpoint of the current daily range. Okay, so because look, this was the high of the day at that time. This was the low of the day at that time. We did retrace in the discount portion of it, and they're buying it. So you can see right here that it's keep going, like a little bit tough past midnight. You can see midnight open. That's this vertical line that you have right here. So past midnight was a little bit rough. You can see right here that's a little bit choppy and a little bit like there's nothing really going on. That you can read that, right? These are very, very small candle, not a lot of movement, but still it's pretty good for someone that wants to scalp very lower time frame. I think it's pretty nice because you can see we take some previous lows, previous high, previous lows, previous high. These are very nice condition for a small scalper, but not very good for somebody that wants to see only 115-minute expansion. This was 3 a.m. right here. You can see again 2 candles side by side with the condition on the bottom, rejecting this previous low right here, total soup. It run higher, take that 50%, and then reject again. Retake that low from 3 a.m., right, forming this low right here. These two low right here are close proximity. I see this as a potential draw for sell side later on, but there's still a lot of works to do on the buy side here. You can see price move a little bit higher, reach for that 75%. And then basically this is a large candle at 8:30. 8:30 took the buy side, tap inside this bearish order block right here. That was basically 0.5 standard deviation of the accumulation range of the day. So if you take that 6 to 2 a.m., right, that's 6 to 2 a.m., you have 0.5 standard deviation, meaning half deviation of this range. And then you have one standard deviation, so one full standard deviation of this range right here. So these are point of interest for somebody that understand a little bit more the daily profile. And as you can see, basically the 8 a.m. actually engage buy side, right? And actually take all of these things right here, including the order block, and then it go back and take these two sell side. So activating buyers and basically delivered buyers to their stop, right? So that's what it is. Then after a lot of inside bar, a lot of hesitation, but still react to the Asia high. So this is the Asia high from 8 p.m. to midnight open right here. So if you take right 8 p.m., so if I move a little bit higher, this is 8 p.m. high, this is 8 p.m. low to midnight, right? So that's your Asia session high and low. Inside of this 6 to 2 p.m. 2 a.m. sorry. Then what I do after is I treat this large wicks right here as a gap. So, High CT has been saying like that a lot of time now. So 25%, 50, 75 was using full spectrum of quadrants on that. So you can see 75 right here, 50%, you can see 25%. Look at the body and how they're always tapping above that 25%, but the body always closed below. So that's the sign there's a potential distribution coming in. As I can see this as a reaccumulation stage, reaccumulate basically some sell side that might be trigger, or maybe some basically some buyers that got activated below these low right here, so they're distributing, not distributing, but reaccumulating these, and also engaging more buyers to go long, and then basically a dump after and take the low of the day right here, which is one of the nice discount arrays you can have during that day, which is still available on that low right here. You clearly see that they're buying it right here. But at that time, it was already 10, 11 a.m. So, on Friday p.m. or Friday past 10 a.m., 11 a.m., if it's not the end of the month, like at the beginning of the month, I don't expect a lot, right? So let's be honest here. But some sort of like small seek and destroy condition right here, uh, you know, take some lows, take some high, take some just small, just consolidation for the rest of the day right here. These high right here are very close proximity. You can see they're taking this as well. And you can do the same thing I've done right here with the treat the wicks as a gap. So you use the quadrant of this on this wicks rate, and you can see they're buying 25%, very, very close from the low. So I would use this Wicks right here is a potential rejection block as well, and take these buy side right here. I really like that midnight open touch right here. Like this is pretty crazy, right? So we're basically running around, the midpoint of the accumulation range of the day and the previous daily Q right here. You can see the body right here, respect. This is only 15 minute. I have a 5-minute chart as well, but you can see more detail basically splitting these 15-minute and 3 5-minute. But I would basically say, just go on your chart and look at it, right? Um, you can also look at the 1 minute for so much more detail. But again, when you're on Friday, when you're on Friday and it's actually very small like this and we're still inside the previous daily range, I will stick to 15 minutes. That's more than enough. Like even 1 hour will be better in that case. Because you know, you're basically merging some of these 15-minute and 1 hour candles. So meaning you don't have a lot of noise. Like these candle that actually does a lot of things. So you can see you're basically merging four of these 15-minute candle into one single body. So decision making is a little bit easier. But that was just a great example here. If you guys like this type of presentation or this type of review or whatever you can call this, a breakdown of what happened during this day, I might consider doing more of these because I kind of like feel that it's a good thing, showing you what I see right here. And it's nothing, nothing like prescriptive. I'm not telling you, do this, do that. That's a sandbox, right? Like this framework is actually a sandbox. Like it's there. Like these are important level. They might be reacting out of it. You can see like over time when you see this framework so much time, I promise you over time it just become very very nice. Like I I personally have a very very good vision of what's going on in real time just because of these specific level. You know, I know that everything above previous day EQ that's premium, right, relative to what we have on previous day. I know that everything below previous day EQ is basically some discount relative to daily time frame. And then after I'm working off the candle itself. So like everything above the current price is premium arrays and everything below the open price, or not the open price but the current price, is discount array. So you can actually just take a quick bite at all of these things, man. There's so many setup inside of that. Like, I can break down so much more than that, but my main focus personally was this large imbalances here. See, that's where we fill the whole thing perfectly. And we also reach above 75% of the previous daily range. So the previous daily range, if you have the high right here, you have 50% right here, you have the previous daily low right here. So this is 25% and this is like 75%. Still can work as well with all these, deviation type stuff. So, hope you guys enjoyed this video. Nothing too crazy again. Try to keep it short and simple. That's 18 minutes, not too bad. And if you like that kind of stuff, just comments maybe that you like it, or maybe just push a thumbs up, and basically I'll try to make. All right. So have a great weekend and see you guys next week.